Alright, and welcome to tonight's chart review. Today was Tuesday. Powell spoke at 1:15. That was kind of the only red folder news that we had. But I wasn't too worried about Powell's news. I know like him talking isn't gonna like spark mayhem, but it did spark volatility. And that's what we want to watch out. That's what I want to point out. It was like if it for me personally, and what my conviction with it is like, unless it's FOMC, unless he's speaking at FOMC, I really don't think there's something to be overcautious about. There's just something to note. Like, I'm not gonna be in a trade like right when he's speaking, but just keep in mind that that's just my personal conviction with it. So I knew he was speaking at 1:15. I was still treating it like he wasn't really speaking, honestly, because I know it's not really gonna move the market too much. But basically, the first thing that I want to point out today. The first thing, like before we even get into the charts, on NQ, we have just completed sell side of this curve, and we have now taken these two stacked equal lows here. And before the day even started, we were within this daily fair value gap. We've now completed the sell side of the curve on the higher time frame. Let's zoom out and let's just look at the 15-minute today. The 15-minute was pretty choppy. And that doesn't mean that there wasn't good opportunity today, because there was good opportunity. But I just want to point out, before we even start anything, just look at the 15-minute. On days in which we have completed sell side of the curve, there's not really a higher time frame draw. So therefore, anything that you trade today should be trading off of like internal structure, off of like easy low-hanging fruit targets, because there's not really a higher time frame bias. There's not really a higher time frame bias established, because we have just took sell side. Like, where are we going to go? We don't know. The market's going to show us. And today is a day where if you're like trying to target too much is when you're probably going to get chopped up. But today we had a very good setup in the morning, which I want to go over in depth kind of. So we had a clear market maker buy model in the morning. I ended up capitalizing off of this, but I would have capitalized off it even more if I was just a little bit more patient, but I got a little bit impatient. And we'll kind of go in why. So if we look about where we're at open, let's just replay. Let's just bar replay. So market opens right here. So right at this moment, if we zoom in, we have this original consolidation right here. And then we have equal highs. We have left equal highs. We know that wherever we leave equal highs, like we know liquidity rests there. And on top of that, look at this trendline liquidity. Low resistance liquidity. We know price is going to come back to here. This area, this level, these levels here are way too clean. Like there is no prominent high. We just have a high, taper off, high, taper off. Like this is the definition of low resistance liquidity. So immediately at open, my eyes are fixated on this. I want to see this be the original consolidation. Keep in mind, we have taken this higher time frame sell side liquidity area, and we do have this big 15-minute fair value gap, which I want to be the draw as well. And we also have equilibrium of this range that we could possibly head to. Why do the markets move? To hunt liquidity, to rebalance to an imbalance, and also to rebalance into equilibrium. I'm going to remove this. This is consequent encroachment of this gap, but we know that price is more likely to head higher than it is to head lower here, because price is going to rebalance. So we're just waiting. We're waiting. So we now see that there are equal highs above us. We now see that there's a clear original consolidation. We now see that there's low resistance liquidity above us. So we're just going to wait. We're going to be patient. Where else do we also have below us that we could also fine tune of where we could bounce off of? Well, market's probably going to retrace into equilibrium of this range. We also could rebalance into or retrace into OTE of this price leg. So these are kind of what my eyes are looking at. And I was a little bit impatient this morning, but this isn't about how I traded. This is about how we could have traded better. So we're looking for possible us heading back in equilibrium, also heading back in OTE. If we look, we have a 15-minute fair value gap. Also is in discount of this range. We also have a 15-minute breaker right here. We have a high, low, higher high. It's not the cleanest in the world, but we have a breaker here. That's a breaker. We also have, if we drop down even lower to a 5-minute time frame, we also have this 5-minute BPR, which is overlapping fair value gaps. 5-minute BPR here. We have a fair value gap here. Notice the inefficiency in price here. Notice that we're probably likely going to return to this area, maybe. We also have a 5-minute order block here, and then this is OTE of this range. So let's just see what price does. We're waiting. We now have sell side resting here. So I'm kind of waiting. Is price going to bounce here, or are we going to head lower? Are we going to head into equilibrium? So we have sell side resting here. Let's see what price does. So as we, that's kind of a little bit too fast. There's nothing here. There's nothing here. This is just chop. Market's opening. We're just chopping. We're just chopping. We're just chopping. Still nothing here. No displacement higher. Nothing. And now is at a time and point into which we have an SMT at the lows. We have an SMT at the lows, but I'm not going to mark out the SMT until we actually get displacement. That is where I went wrong today as well. Don't mark out, or at least me, I'm talking to myself mainly when I say this, because this is mainly things that I can improve on, and hopefully y'all can get something out of it as well. But anytime we have an SMT, like, don't even mark it until we actually get that displacement, because it's not really valid until we get that displacement. And SMT should just be something that should add conviction to your already existing bias. It shouldn't be something to where, oh, we have an SMT, therefore price is just going to run higher. It should just be an added confluence. So possibility of SMT. We come back down. We come back down. Where is price retracing to right here? This 5-minute BPR. This 5-minute order block. Also, this 15-minute fair value gap. Also, this 15-minute breaker. And look at the wicks. Look at the wicks. The wicks are doing all the damage here. If we zoom out even to the 15-minute, the wicks are doing all the damage. Like, if you're just too caught up in the 1 minute of like what the 1 minute's doing, you're gonna get caught up, because the 1 minute does not mean anything unless the higher time frame is present. So we look. Okay, this is then. I want to draw your attention to here. So now we come back straight into that BPR, straight into OTE of this price leg, straight into this 15-minute fair value gap. We have an SMT at the lows now. Price does not need to head lower at all. There's no reason for price to go lower. We don't need to take this low. We have clear original consolidation above us. We have clear equal highs above us. We have clear low resistance liquidity. Price does not need to go lower. I ended up taking a trade here. This was way too early. There wasn't really anything to trade off of. But looking back, we have an SMT. Once you see this SMT and then you see this fair value gap form, we also have a change in state of delivery here. Change in state of delivery. Change in state of delivery is when we close above this order block. So this would ideally hold as a bearish order block, these down closing candles here. But right as soon as we close above this, that is your change in state of delivery. So it'll close above here with that fair value gap. Could have been your original entry because we have an SMT. I mean, if you're very confident within it, you could just enter here. But we're not worried about that because we don't care about that. So we're just seeing what is price doing. We're waiting. Where could price possibly retrace back into? We're looking, drawing out our fib. Oh, price could possibly come back in this fair value gap. This is where I'm looking to enter at this point. I want to see this come back in this fair value gap. But we don't end up coming back into this fair value gap. We don't. Price just runs. At this point, I'm not looking to take anything. Price can run without me. That's cool. At this point, there's no reason to force a trade, force an entry. If price just wants to head up to these highs, then we can completely do that. I didn't get my entry. Cool. Next trade. There's always going to be more opportunity. We're waiting here. Ideally, price could have come back down to this fair value gap. That would have been your best entry. That was what I was really looking for. It never happened. The market's not always going to give you what you're looking for, so you can't be mad when you don't get what you're looking for. That's what I was really looking for. But notice how price just runs here very, very fast and very efficiently. That is because we have the SMT. The time in which we're not going to really get a fair value gap entry, the time we're not going to get a clear, like, low risk entry, a clear, like, 2022 model, a clear, whatever you want to call it, are the times in which we usually have an SMT. Because SMT shows that manipulation. SMT shows no willingness to go lower. SMT shows us that we're likely to bounce. Notice where we, like, look at the bodies here. Look at the bodies here at this point in time. Look at the 5 minute. Look at the 5 minute bodies too. The wicks are doing all the damage. The wicks are stopping out traders. The wicks are pushing price lower. But the bodies on these candles are staying in line, intact. Just look at price. Look at price. So we come up. We're almost taking buy side here. We almost are. Now, this is then when I look. I draw on my fib. And now I'm waiting. I'm looking. So we have a potential order block here. I'm looking, and I'm just waiting. So this is the order block I'm looking at. Also is equilibrium. I'm going to remove this, but around this order block is equilibrium. We also have an order block to the left side of us here. This also now is a bullish order block because we have closed above it. These down closing candles now become the bullish order block. Let's zoom out to the 5 minute. That's what we're looking at here. There's not really any other PD arrays that any like inverse fair value gap. No. Anything else? No. There's not really any other PD arrays. But this displacement shows us that we truly want to go here. And all of these stacked highs tells us that price wants to go here. There's no willingness. Like, price does not need to go to this low because of this displacement. This big displacement move tells us that we're going to go to this high. So we have equilibrium resting around this order block. We also have this 5 minute order block here. Price never rebalanced to this fair value gap. That's ideally where I would have liked price to come back to, but it never did. So we're waiting. We're patient. We're waiting to see what price does. Boom. Right here, we come back in that order block. We come back into equilibrium. I entered here, and I'm targeting the original consolidation. This is clear market maker buy model. This is buy side of the curve. We have sell side of the curve, taking us down to that 15-minute fair value gap, taking us back to that 5-minute PPR, taking us back into OTE of this range to then have a smart money reversal. We're able to identify the smart money reversal with the SMT to then we get bought up. We have displacement higher. We have a market structure shift. We don't really get a clear lower risk entry. We don't get a clear first stage and second stage. It's kind of a little bit ambiguous. And like market maker buy models aren't going to be picture perfect every time. They're not. But if you have faith that we're going to go here, that's what I did. I entered here off that order block. Price ends up getting bought up straight to that draw. So this was the first trade. This was an A+ trade. I really like this trade. I originally left a runner to the 15-minute fair value gap because I want to see price go higher to this 15-minute fair value gap, also into equilibrium. I thought that price was going to go higher for the rest of the day, but we did not end up doing that. I'm kind of going to go over what price did. But this is a very nice market maker buy model. Very nice. Price is delivering. We now have generated liquidity. We are generating liquidity on a way lower to deliver price to the 15-minute fair value gap. A lot of the times when we rebalance price to a 15-minute fair value gap, there's likely going to be a market maker buy model on the 1 minute. Or if we're retracing into a 1 hour fair value gap, there's likely going to be a market maker buy model on a 1 minute time frame. It's all about context. Why does price need to go higher here? To hunt all this liquidity that we have been generating. To rebalance to equilibrium of this big price leg. To rebalance to this 15-minute imbalance. So price has reasons to go higher here, therefore it will go higher. Price has less of a reasons to go lower than it needs to go higher. Price does not need to go lower here, so therefore price will go higher. This was a great model. Order block entry was only the really entry I saw. I would have minded an early entry here, maybe off of I don't know. I don't think it's a reason to like kind of take these entries, but the only like true on entry I saw was this order block. So it kind of was trickier. Maybe this fair value gap, if you entered in off of this fair value gap, put your stop here, that would have been a good trade. I entered off the order block though, but this fair value gap I wouldn't have minded. I want to see us retracing the equilibrium because that's where the order block was. So that happens. That first trade, that was the first good trade. Does anyone have any questions about that trade? Because I thought that was pretty clear in my opinion, and I thought that was a pretty clear trade. I ended up actually taking that trade. I ended up capitalizing off of it. I took an entry, a way too early entry here. And then that kind of faked me out. And then once we get this move, I was a little bit hesitant to take an earlier entry here. But I ended up capitalizing and taking off the order block, so which I thought was nice, I thought was cool. So I'm going to exit replay because I don't really want to be in replay anymore because I just wanted to look at that model. So this is then when we take this high here. If we pull up ES at the time, ES is nowhere near buy side. So ES is just very, very bearish. ES is dragging behind. ES isn't really wanting to go higher. And at the time, once NQ takes buy side, once NQ has taken this buy side level, NQ is right here, or ES is right here. So now we have an SMT at the highs. We have just taken buy side on NQ. We have SMT at the highs. This would have been And okay, I don't really like the short here. There's not really too much framework behind it, but this is a market maker sell model. I don't like it. I don't really like it. SMT at the highs, pull back to fair value gap. I don't like it, but that's just another possible entry. And then ES comes down to almost take this low. Now we have equal lows below us, and this is then when I potentially might see something else. So we have this low here. I'm not looking to long any of this because ES has equal lows below us. There's equal lows below us. I'm not really looking to long here. I think that price doesn't really need to go higher. So at the time, ES has equal lows here, and NQ ends up getting bought up to this high. I don't love a market maker buy model here because ES left equal lows, and I don't really feel confident. And I wanted to see ES take that low. Yes, we do have an SMT at the lows, but I don't really love a trade. It's not my type of trade, but notice how choppy price is here as well. Notice how, like, if you're in a trade here, it's pretty choppy. It's not clear. We're kind of just chopping around. And what are we doing here? What is price doing here? We are generating low resistance liquidity. Low resistance liquidity here. If we look on ES, it's a little bit clearer. We have now just taken internal liquidity. ES is nowhere near this high, so we still technically do have an SMT at the highs. And then this is when we get displacement. We come back down. We take an internal low. And what I've been noticing, or what I've been backtesting recently, is anytime that we sweep an internal low, we usually end up coming back into equilibrium. At this point in time, we come back into OTE. We now have all of this low resistance liquidity below us. Prices come back down, displaced. I don't really love a trade here. I actually ended up taking a trade. I'm not very happy about it. Had I kept my stop, I would have won this trade, but there's not really too much opportunity here. I don't really love a trade here. And then Powell ends up speaking around this time, and then look at what price does. We dump. Like, whenever we say low resistance liquidity, why is it low resistance liquidity? Because we're likely going to take it with very low resistance. And this could have been another model. I was really looking for those equal lows. But other than that, I don't really love anything. So at this point in time, we now have an SMT at the lows. And keep in mind, we have an SMT at the lows. And now we have equal highs above us on ES. We still have those equal highs we still haven't taken. So I'm looking to see, hey, this could be a time in which we actually get bought up. Because now we have another SMT at lows. Now ES has now taken those equal lows. So once we take those equal lows, we might be able to actually go higher. So we have an SMT at lows. Keep in mind, NQ still has that 15-minute imbalance. It's also an hourly imbalance that we haven't come back into. So along here, I actually don't despise. We have SMT at lows. We have just taken equal lows. Let's look at the 15-minute. This was kind of could have been your conviction behind this trade. But if you look at the 15-minute, look at this 15-minute candle here. Let me go back and replay. Look at this. Look at this 15-minute candle here. We have just swept sell side. We now have an SMT, and this was kind of like that candle at open or at around open for that first market maker buy model. Look at the candle. We have taken sell side, and look at how bullish this candle's closed. We were all the way down here, but now we're closed all the way up here. So that could tell you that we're possibly, or we could reverse. So that could be your first signs of a reversal, that we want to go higher and target those equal highs because of that 15-minute candle. I ended up heading out for the day. I wasn't going to trade just to trade. But then we have that bullish close on the candle. We retrace lower. I'm not seeing this. This is just a retracement. And then we create a fair value gap. We also have an inversion order block here. Inversion order block. Order block on the left side now uses inverse. And price just ends up getting bought up to those equal highs. So an entry here, I wouldn't mind. But for me, I took my L's, or I took my trades today, and then I got on with my day. After this, there really is nothing. So now we have taken lows and highs of the range. After this, like, this is just what's been happening recently, especially when we have taken lows and highs. Price hasn't done anything. So to look for opportunity here is just there's no need. There's no need to be even looking at the charts at this point. At this point in time, I'm on with my day. I know that there's not going to be any opportunity. And there really is nothing here for the rest of the day. I don't think that there was a single thing. I don't. I don't think you should even be on your charts at this time. I wasn't, and that's the beauty of trading. Like, you don't always got to be on the charts. You can trade the 950 macro. That's all you need. You can trade a 1050 macro. That's all you need. All you need is to find out what works for you. You can trade market open, and if that works for you, that works for you. But after seeing this, like, I took my trades for the day, so I don't really need anything else. Yo, it's good, ICT. Bro, you up at this time? Respect the grind. For me, it's 4:50 p.m. So for me, it's 4:50 p.m. I'm honestly not a big advocate in people that like saying like you grinded all night, or like, yo, we're grinding all night, or I'm staying up all night. I'm not a big fan of that. I'm a big believer in sleep. I like to get that 8 hours. 8 hours. Yo, what's good? I believe that 8 hours of sleep is very important. That's kind of off topic. But anyways, those are kind of the trades that I saw, and I really want to talk about the bias going into tomorrow and kind of what I'm looking at to go in tomorrow. So if we look at NQ, NQ has now completed sell side of this curve. We now have, let me delete all these drawings. They're really insignificant. I trade NQ and ES. Yes. I only trade NQ and ES. I don't trade anything else. So we have now taken these lows, and now we have a daily imbalance. So we have taken sell side, we have completed sell side of this curve, and now we're in this daily imbalance. So this is really going to tell us what we want to do. The fact that we have kind of caused a reaction tells me that we actually do want to go higher, and I think that the draw is going to be higher within the upcoming week. We still do have SMT at the lows, and therefore we also have this 15-minute imbalance. We also have equilibrium of the range. So it's all going to depend on what happens overnight. But I would ideally want to see something like this to where we were kind of just, this would be best case scenario where we're generating liquidity to then have a smart money reversal to then head lower. The reason why I'm more bearish is because of ES and YM. If we look at ES, the draw for me becomes these relative equal lows down here. This also is a daily fair value gap on ES. So I really want to see ES draw into that. But this could be an area in which we reject off of NQ, because NQ does have these highs up here, but I don't necessarily think that we are going to head up here. But we also have this massive 4-hour imbalance. We also have a 1-hour breaker here. We also have a 1-hour order block here. So these are all places in which I'm looking to see us possibly draw towards. So we have breaker. We also have an order block. We also have a big fair value gap. We also have a big 4-hour fair value gap. So I'm expecting to see us kind of head higher to then head lower. I'm still bearish, and it all depends on what the overnight session does. Say overnight session, we dump, then we're likely not going to find too much opportunity. We've just completed sell side of this curve on NQ, but I do think that ES is going to complete sell side of its curve and come into the daily fair value gap on ES. I really think that the draw is this daily fair value gap, also these lows. It would make sense. We've now gotten displacement through these lows. We've had the market structure shift on the daily. So I'm at least looking to see this happen on the daily, on ES. So that's what I'm looking for. That's kind of what my bias is depicted off of. I'm looking for something like this. Look at pretty much every single day within this. Granted, it's probably not going to repeat, but we've had a sell-off, and then prices slowly rebalance. And then we've had a sell-off, prices rebalance. Then we sold, price rebalance, and then we sold. So this is kind of what I'm looking for. Again, kind of the same thing. I mean, granted, thinking that we're just going to repeat this is, I'm not really too much looking for it, but I'm looking to see sort of retracement to then have something like this to where we manipulate and then head lower. That's really what I'm looking for. That's what I want to see. That's going to be my bias for the upcoming days, or at least for tomorrow. Most of my bias will kind of be depicted off of what we do. Notice that we also have taken this low on NQ. On ES, the draw for me becomes these lows. So I still have a draw going lower. But on NQ, we have taken these lows, so I'm going to be a little bit cautious. It's not as clear. Like up here, I'm clearly bearish on both NQ and ES. But right here, I'm kind of bullish, looking for a rebalance in price and then head lower. So that's kind of what I'm looking at. Most of my trades that I'm going to be looking at for the next week, are going to be based off of that 15-minute structure. Like all the trades today that I was looking at were based off the 15-minute. And like you don't need hourly, daily, 4 hour. Like all you really need is the 15-minute structure, and then you're gonna be able to take trades off of. But basically, that's all I really saw today. Does anyone want to interpret their analysis? If not, it's chill. But I took 1 win, 2 losses. The 2 losses I took probably shouldn't have happened, but they were kind of just me being undisciplined. But I thought today's price action was decent. There was that fantastic long on NQ in the morning, and I thought that price action was decent. So I really don't got much else. That being said, I'll catch you guys later. I'll catch you guys tomorrow. We'll be back for live trading. I really appreciate the support from you guys. And